don't think it'll hamper the mortgage market, but in 2025, what I think everyone needs to realize, yes, the Fed will probably lower the Fed funds rate maybe twice. I mean, before yesterday's meeting concluded, the forecast for 2025 was that the Fed was going to lower the Fed funds rate 4 times. Now they're backtracking and saying it's probably only going to be 2 times. That's the current bet in the financial markets. So that will, as a result, that is a signal the Fed, as I said earlier, is going to go slower and be less aggressive in reducing the Fed funds rate. That is part of the reason why longer term rates, the bond yield and longer term rates are going to remain elevated. We're going to be in this 6+ interest rate, mortgage interest rate environment, I would argue, for an extended period of time. All the major market participants, Fannie Mae, Freddie Mac, MBA, et cetera, National Association of Realtors, are all in various degrees forecasting we're going to be in the sixes all of next year. And so maybe in 26, we might see some improvement, get under 6. It could be 27 before we could see some real improvement in rates. So as a consequence, I continue to say if you're a prospective home buyer, you want to buy a home, but you think it's not affordable, I would argue check with somebody like us. Let us first help you determine if you can afford it, if you can at least qualify for the financing. And then I would argue you're better off not waiting any longer because waiting so far hasn't paid off. And I think from all viewpoints, waiting some more is probably not going to pay off in terms of rates getting as low as you're expecting them to go. So you've got to figure out some other strategies to get into housing now if you want to. Again, I'm not trying to suggest anybody should try to buy a house if they're not able to afford it. That's where we come in. We can tell you if you can or not. But there's a lot of folks out there who I think would like to buy a home. They've convinced themselves that they can't qualify for it. Now, maybe they don't want the payment they can qualify for. That's a different issue. But I can help you. We can help you make that determination. Number one, determine can you qualify? And then, of course, we can help you and be a sounding board for you so we can discuss do you want to qualify at today's rates and today's note rates, I'll say, because as I keep harping on, a great strategy in this environment is to take advantage of home ownership if you want to, and we can determine you qualify for it, and then use a buy down strategy to give you some payment relief for up to 3 years.